Hello, everyone. Hello, Sam. How are you?
How are you doing, man?
Doing good, doing good. I mean, we've gone back and forth on social media, I think, a couple of times, but this is the
Yeah.
first time we actually have a opportunity to chat.
Okay, well, that's a stream. Good talking to you.
Exactly. Thank you all for joining. Goodbye.
What a day, man. What a day.
Yeah, pretty good day, I'd say. Pretty good day. Green across the board. Can't
Oh,
complain.
wow. I don't even know if this is just green across the board. This is just sticking it to a bunch of bears, especially seeing Tesla up like 7% today. This is pretty wild. Considering the sentiment there was last week that everything was going to fall apart and tariffs were going to come back on. And then over the weekend, of course, we got the development with the EU. I just, I don't know. I'm getting less and less surprised this is happening.
Yeah, I mean, first of all, hello to everyone that is joining. Appreciate that. Yeah, I mean, maybe it was a good thing that yesterday the markets were closed. Maybe it was a good thing. Gave us a little bit more time to digest everything. But
Yeah.
yeah, I'm pretty sure the bears are pissed for already a month and a half or so.
Yeah, I mean, my whole thing, and I mean, sorry to touch up on it, but like, of course, macro is going to impact pretty much almost all the stocks across the board, especially when you think about like public investment and private investment, anything from a long-term perspective. But it's just a month ago, you had amazing prices and the market was down 23% peak to trough. And then now it's like, well, what else do you guys want? You know, do you want to revisit those lows so you can get back in from your underweight position? I don't know. We had the opportunity and I think we both took advantage of it. And here we are today, just enjoying it.
Yeah, exactly. I mean, a month and a half ago, retail bought the dip
Yeah.
and the big guys unloaded. And now they're probably chasing. I mean, there still
Yeah.
is, what is it, over $7 trillion on the sidelines.
Yeah. I saw that being floated around Twitter. I mean, a lot of that's going to stay in the sidelines, to be honest, because it's the money market funds. But at the same time, you know, it just shows the extremity of like how much capital is just sitting there when I would say part of it is, in fact, liquid per se, like where it could just be liquidating and rotating to something else, whatever it is. But I think the big thing today was seeing gold down like 2%, seeing bonds up and everything. It just shows that people are rotating back into risk on and they're in a much more favorable risk on environment. And moving and transitioning onto what we're going to talk about, you could see the space stocks are really rallying today. Of course, Tesla, probably the only way that retail investors can get in on SpaceX and Starlink, probably the only proxy they can use right now. It's up 5.87%. Elon is back. Fortunately, he postponed the SpaceX event, which I was looking forward to, but I'll watch it later on tonight, which is cool. But yeah, I mean, it's good to see that news. And Rklb is up over 10% still. I think I haven't checked in a little bit.
Yeah, I think so.
Yeah, Rklb is up 12%. Asts was up considerably more, but I would say, it's still pretty down there, especially considering my average. I'm not going to lie, I'm below my average, but that's fine. But yeah, I mean, we talked about this. We talked about this when we were chatting with each other. I have a position in ASTS. I have a position in Rklb. SpaceX, I don't have a position. I wish I had a position in Starlink, but I do have a small Tesla position. But you said that you have Tesla, and you also have Rklb as well.
Yeah.
So I think you said you also own Google, so you have a part.
Yeah, exactly.
You own a little
I
bit of ASTS. So
indirectly, yeah. Now, I mean, it's 12.9% of their investment portfolio now for Alphabet. So it's a pretty big chunk. I can't remember how much of the company they own now with their investments. So I guess that's the indirect exposure. Plus, I still believe they have their SpaceX investments as well. So I guess I have both. Both exposures.
I mean, that's the interesting part about the venture with Google, is that they also have a position in one of the companies I own as well, GitLab, GTLB. But yeah, I mean, they're kind of going for, ironically, the space TAM, and we're going to get a little bit more into that with some numbers and statistics. But if you have these companies kind of going long it, especially Google, which is really good at its ventures, performing considerably good in my opinion, I think that they're kind of like telling us something, and on top of that, there are some major investors and hedge funds that also got into ASTS as well. If I recall, I don't want to say it right now because I know that there was a difference between like Grab got a lot of news and a bunch of 13Fs in addition to ASTS, but there was a major one. I want to say it was George Soros that got into ASTS. Let me just
Grab. I know it's Howard Marks who opened the position in his portfolio, and I think that's about it. ASTS, I don't know.
Okay, George Soros family office, new position, ASD Space Mobile. So it's his family office. It's not exactly a big hedge fund, but I mean, that kind of says something that they're looking at it, being that it's pre-revenue. Not like Rklb, of course. They already have revenue. They're already built into a lot of verticals and a lot of companies, a lot of government contracts. It's good that we're going to be here to educate people a little bit on ASTS as well. I know you're looking at it. Obviously, out of all of them, SpaceX is the biggest one. I think they're at, what's their valuation? Like almost 200 billion or 150 billion? I forgot the last 350. Okay. Yeah. All right. I was just a little off.
Yeah. A little 100 billion here and there.
Yeah. I got this chart that I wanted to share here. Do you mind if I share my screen?
No, for sure. Go ahead.
Okay. Here we go. Okay, so this is a chart. I actually took this from a company called Starfighters. They're having some sort of private investment thing. But anyways, I took their data that they had on here, and I'm sure this is well more updated. But you can already see on this chart that's let me make this a little bit bigger. You can already see in this chart that the amount of launches to outer space is just exponentially increasing. And this is only up until 2023. What does it say here? Yeah, it doesn't say the year, but I'm assuming it's 2023 there. So 2023. And I don't even know. I can't do the growth rate on the top of my head, but obviously it's gained quite a bit of exposure in the last 10 years. And I'm sure when we go through some of the presentations from Rklb as well as ASTS, obviously these launches have increased in frequency dramatically. SpaceX used to launch maybe like a few times a year. Now they're launching something every single week, two times a week sometimes. Rklb is obviously much more frequent. So Rklb is they do a couple things, and you could probably I don't want to explain this too wholly because I know that you got in much earlier than I did. But from a high level, Rklb is kind of the entire logistics for outer space, but they also offer a software platform as well. So they're getting revenue from both of those verticals, but ASTS or AST Space Mobile is not. They're not a launch platform. They basically launch little satellites into outer space to distribute mobile connectivity, partnering with a lot of the MNOs or mobile network operators like Verizon, Rakuten, Vodafone, AT&T, and they're partnering with them to provide basically cell phone service to the entire world and basically fill in a bunch of gaps. And they're doing it from an infrastructure perspective of not actually building towers like American Tower would have, but rather launching satellites in outer space. So that way they in lower Earth orbit per se. And what that means is that they're actually, I think they need about 65 satellites in order to have a full end-to-end system to cover basically any demographic around the entire world. But what that means is that you don't need a modem to connect to their network or to connect to Verizon's network that's leasing these satellites from ASTS. You could just use your cell phone and just connect to it, right? And it's going to be seamless. I'm sure during the trial stages, it's not a seamless connection. You got to do some stuff on your phone to get it, whatever it is. But the capability is already built into your phone, so you don't really need to have a modem like Starlink does. However, they are trialing and testing out that type of connectivity. But as it is right now, you need a Starlink Mini to use it on a more mobility scale. And then, of course, as the actual Starlink device, if you're more static, like at your home or something. Rklb did acquire a company named Myonic. I think that was the name, which is more in laser technology for satellites to communicate with each other. And that's actually pretty interesting because this can lead into a way where Rklb can get into this market. I mean, being that you have three major players, I want to say major, but one major player, and then you have Rklb as well getting into this market, and then obviously ASTS is already in it. It obviously is something that these companies are going for and holds some sort of importance for early investing. And just like seeing something like that, you kind of see the writing on the wall along with this metric right here, basically up and I wouldn't even say up and to the right. This is like just up, right? The amount of launches going to outer space is just erupting at this point. And SpaceX is having a launch today as well for the Falcon 9. Rocket Lab has medium to small size payloads with their logistics end of deploying payloads into outer space. SpaceX has Falcon 9. Thing is freaking huge, right? Or is it Falcon 9 that's a big one, or is it Falcon Heavy? Forgot. But
Falcon 9 Heavy, then the Starship. I mean, it only gets bigger.
Yeah. I mean, it's ASTS, like these satellites are much smaller payloads. So they're obviously not going to deliver something where they require something like a Neutron or something like a Falcon 9 to launch in outer space. It's a much smaller scale, and like these little satellites fold up into something the size of a bedroom. And then when they expand open, I don't know the exact square footage, but that's the idea behind it, to compact everything into a small payload. And then when it launches into outer space, they figure out all the mechanics to do that. And then there's a company called Starfighters, which is kind of newer in the industry, where they're launching smaller payloads into outer space, but it's instead of launching in a vertical launch pad platform, they're launching jets into the sky, and then basically the payload gets ejected off of the jet into low Earth orbit. So something of more of a cheaper scale. But the point is that they're figuring out ways to make this a lot cheaper. I had another graphic that actually showed the statistic, but let me share this chart as well. So in this tab, this basically shows the amount of government spending on space programs between 2022 and 2024. And then you have here for the United States, almost increase. I would say this is like about 20 to 40% since 2021. And then what's interesting about Rocket Lab is that they're expanding into European launch platforms, which isn't that small, to be honest. I mean, this is already growing. I wouldn't say this is growing as quickly as the US. Like, you could just look at this chart and see how much it's grown from 2021 to 2024. But even today, Europe is getting into that. And then, of course, Rocket Lab has a launch pad in Virginia, but also New Zealand as well. So I'm sure they're going to attract customers in Asia, or at least, now I want to say Southeast Asia, but somewhere in that region as well. Just gets pretty exciting, you know, when you see stuff like this. Sorry, I've been talking for most of the time. I'm sure you have a lot to put in here.
Yeah, no, I mean, the launches for Rocket Lab are of course going to happen in the United States, right? It's going to happen in the United States, especially Neutron. So it's great to have businesses, I mean, establishing their businesses also outside the United States, whether it's New Zealand, Europe, or maybe in other parts of the world in the future. But I do assume that the launches will just happen in the United States, because it just makes the more sense in the future. Now, Rocket Lab, I mean, to me, Rocket Lab was interesting because, well, of their vision to be that one-stop shop for all your space needs. Now, everybody thinks that Rocket Lab's business is just launches, but launches is just 1/3 of the business. And then in the future, I would assume in the future it becomes maybe even less as they go into space applications and all of that. Whether they also go into telecom or other things will remains to be seen in the future. The opportunities are huge. I think you floated the idea on X, maybe someone else, that ASTS and Rocket Lab could have been a one company and actually offer that full solution, right? ASTS could use Rocket Lab as their launch partner. Now, of course, for ASTS perspective, having one launch partner does not make sense, which is why they have SpaceX, Blue Origin, the Indian one as well.
Yeah.
So, I mean, imagine if they only had Blue Origin. Who knows when they'll go to space frequently. So,
well, recently they did launch, or Blue Origin did launch something in outer space recently. So we'll see there.
Yeah, but you would like to go. I mean, this is also why the expenses have increased. That's something that they said in the recent quarter, because they just want to accelerate. They want to go there sooner than expected. They're willing to pay a little bit more as well. So I guess it makes sense. Plus, like you said at the start, their strategic partners are not strategic partners just for fun. I guess they see the potential, right? If it's a Google, or who's there as well, Rakuten, maybe Verizon, as strategic partners. So it makes sense. Usually when you follow the money, I guess it's a good indication as to if this is a serious thing or not. But yeah, I don't know. I'm still looking at it. That I looked at it almost a year or so ago, when it first reached their all-time highs. It was when I think Rocket Lab was still worth $4, $5, $6 or so, and ASTS was already at $8-9 billion, and I was like, okay, there is some disconnect here. Doesn't make much sense.
It's a bit of hype. I'm not gonna lie. There's a bit of hype.
It was just after that huge jump in that stock, and I was like, okay, but I was like, I still think Rocket Lab needs to move up. Like, if this is worth $8 billion, at least Rocket Lab needs to follow that, and it did. And now we're basically almost at the same price. Of course, one is already generating more revenue than the other, but the other is expected to generate hundreds. What is it, 200, 300, or maybe $1 million in fiscal 26? Remains to be seen, of course, if everything goes as planned, etc., etc. It is a very interesting story to follow. Very, very interesting, because you're paying, of course, today already quite a lot of future revenue growth, for sure. I mean, whoever is telling me that you're not paying, you're lying, because you're paying already $8 billion for a company that barely generates anything. Yes, okay, in the future, they might generate billions, but that's for every company. In the future, they might. Question is how much I'm willing to pay for it today compared to what I'll get in return in the future. Plus, there is always that, do they have a huge advantage? Yes, no. Are the competitors coming for the launch in the future? Yes, no, because right now Starlink, like you said, Starlink is more focused on selling you devices, whether it's for your boat or your plane or your house, less focused on your phone. Yes, they have that partnership with T-Mobile for that direct to cell communication, only text at the moment.
Yeah.
Will probably develop to something more in the future for sure. Now, currently, it's also the difference is that their tech only works when you're basically outside and you have a clear view of the sky, which I agree is a bit of a deal breaker, right? Because what if you are in a cave or in a forest and you don't have that clear view of the sky? The service will not work. Okay, fine, but I guess this is something that they will work on in the future. Plus, at the end of the day, this is a service that you would want when you are maybe in a desert or whatnot. And in a desert, I assume you have a clear view of the sky 99% of the
I
time.
assume you do.
Yeah, exactly.
If you don't have a clear view of the sky, then you're probably not going to be in the desert. But yeah, I mean that's like kind of the difference between. But without a doubt, Starlink's going to figure it out. Like I don't think just the amount of funding that they get, I would not be surprised if they come out as like a pretty big competitor. But you have T-Mobile, AT&T, and Verizon, the big three in the U.S. as far as mobile network operators, MNOs. And then, of course, T-Mobile did play a little bit of catch up recently. They're falling far behind. I mean, I've used all three of those carriers my entire life. So I end up having T-Mobile today. That doesn't mean that I'm a ASTS bear. That just means that I have T-Mobile because I'm grandfathered into the same plan for 10 years. But at the same time, it's like, well, they all exist in parallel with each other, for a reason, because there's a lot of market out there and it's just growing, right? So you have a lot of the smartphone penetration that isn't just evolving in the US, but also around the entire world. And that's part of the thesis for Grab Holdings, which I know, do you own Grab?
Also indirect through Uber.
Okay. So that's a part of it. But I mean, at the same time, it's like the smartphone penetration is really what's playing into the whole secular trend. When you think about the reason why they're doing all of this, they're not doing it's like, hey guys, see that little dot up there? That's my satellite. That's me right there. Like, no, they're not doing it just to look cool. They're doing it because there's obviously an opportunity here. And I don't think that's going to die anytime soon. I mean, just my niece was using her cell phone yesterday. And the reason why I bring this up is because just think about like the magnitude of how fast this is growing with smartphone penetration was that she was using TikTok yesterday with one hand after she was eating dinner. And I've never seen anyone able to use a platform that quickly with one hand in my entire life. Like she was watching videos, scrolling through, doing this. Think of how much data is being fed through her phone and how her phone is connected to all these people around the entire world, right? Maybe not her specifically, but in general in the entire network. And then think about that at scale, maybe like 5-10 years from now, where you're going to have like the same kid in, I'm not trying to pick a country, but like let's say a same kid in Ethiopia who doesn't have a cell phone today. Likely maybe in 5 or 10 years, everyone out there is going to have a cell phone because they've reduced the costs on it so cheaply. But then what are they going to do? Build like 20 million towers around the entire world? Or are they going to work off of the mobile connectivity from satellites in low Earth orbit where that can easily scale, right? So when you build a tower, you have to put the labor out there. You gotta sign all the contracts, the land leasing. You got to hire all the people. You got to create the relationships with all the construction companies, the government, everything. And then you got to start getting permits to run at a certain frequency and so on. When you send it in outer space, I'm not saying that you don't have to do all those things, but certainly the costs are decreasing as we've seen in the chart day by day. What was it like 54? I think it was $54,000 per kilogram to send a payload into outer space a few years ago. And today it's like $2,700 per kilogram for a payload. I'm sorry, maybe that was supposed to be $1 million. I have no idea, but I'm just saying that to think about it in terms of nominal context, going from 54 to 2.7 in just a matter of a few years. And then think about it in 5 or 10 years. I'm not going to say it's pennies to launch to outer space, and the payloads will certainly be bigger, but it makes more sense from an economical sense to build infrastructure in low Earth orbit than to build it by hardwired, which is what's the term we use in IT, to let people around the entire world use TikTok and use all their mobile applications to run streaming or send text or whatever it is around the entire, whatever we're doing in a few years, whether it's hologram communication or not. But just think about how much more it would make sense to do that in the future versus today. And then that is kind of my big thesis behind investing in outer space companies, is because that's the only direction it's going to head. Like in the .com era, they were building large cables underneath the ocean. And most of that is not even being used today. And you know how much money they spent on that. That's just to waste. You send it to outer space. When you build a cable under the ocean, you're not going to destroy and then retract it and take it back. If you send a satellite to outer space, you can easily bring it back down to Earth and then send a new one up there. So it makes a lot more sense to turn over the equipment that's sent up there to have the best equipment up there, right? I'm just saying, like, all these thoughts go into the entire secular trend of the reason why I'm investing in it now. And even if I was late for Rocket Lab, what is your cost basis? Like in the low single digits, right? With you and every single person out there. Unfortunately, I missed that boat. I don't mind paying a little bit extra, having a much higher cost basis, because if, let's just say in 3 or 4 years from now, Rocket Lab has gross margins that will be much more competitive to a Lockheed Martin or Raytheon, right? Rocket Lab is going to have gross margins in like the 40% area, right? That, like, these large defense companies who are also building rockets and everything as well, they would love to have gross margins that high, but they can't. And now that's a good part of Rocket Lab, as we were saying. I actually have a chart over here as well. I'm going to share this one. I know you use finchat.io, so you'll like this one. But this is basically Rocket Lab's trailing 12-month revenue for basically since June 2021. Look what this was. And this is launch services revenue, which is basically using their rockets to launch people's payloads. Yeah. And then space systems revenue. This is more of the software related revenue that comes in, probably a much easier metric to project out in the future, right? And this is scalable as well. So just like, look how little of that percentage was in June 2021, and look how much it is today. And it doesn't look like this is stopping anytime soon. In fact, it looks like probably on an annual basis, this is continue accelerating, right? And just like think about, and this is more in the Rocket Lab terms, but just think about, like, would you go long this chart if this was like a stock chart? I know you're probably like in over here, but I'm saying, like, this doesn't look like it's stopping anytime soon, right? This doesn't look like it's going to slow down.
To accelerate, because neutron basically brings the price of neutron is what, 8 times, 9 times that of electron, right?
Exactly.
So it's going to accelerate. Plus, it unlocks plenty of markets for them, right? It unlocks the satellites, Constellation One. It will unlock probably mining in space. It will unlock so much. Like, I don't know if it's Goldman or JP Morgan that said that the space economy, space industry is going to be worth around $1.1 trillion by 2030. And I mean, if you just take a small percent of that, I'll be happy. Plus, for Rocket Lab, again, it's all about their one-stop shop. You come to them, you get everything. You don't need to go to someone else. Of course, owning the launch capability is great, which is also something that Starlink has with SpaceX. Gives them a huge advantage. I'm not saying it's a huge disadvantage to the likes of AST Space Mobile, because again, there are plenty, well, not plenty, but there are a couple of space launch providers which they can use. Of course, it's costs, but once you've got your satellites up in space, they're up in space and you generate your revenue. It's not like, oh, I'll need to use those launches every single day. No, once you've built your constellation, you've built your constellation. Okay, maybe you'll have to launch again to replace or whatnot, but in the grand scheme of things, the big cost comes at the start. Once you've built out that constellation, once, of course, you manage to get subscribers or I mean, more partnerships, more deals, the job is done. Most of it, I'd say, unless I'm completely mistaken here on the long-term thesis of AST, which I assume you know better than me.
Yeah, AST, it's not like, to be realistic, and and not even being realistic and being factual, is that the only revenue they're gaining in today are some government contracts that they sign, they're getting paid for, right? But like they haven't actually tapped into the revenue that they'd be getting through the MNOs that they sign contracts with. But that's supposed to be happening later this year and then 2026 as well. And when that does happen, they're supposed to be very, I want to say, profitable in that region, because the profitability won't come until later on this decade. But they're supposed to be gaining a lot of revenue that, of course, the market is pricing in today. But also on top of that, Rklb is very into the government contracts, so is SpaceX as well. But AST, there's a possibility they might get into the Golden Dome. And supposedly, and it hasn't been actually announced, Trump did announce the Golden Dome operations. And then there's been talk that AST, they're going to be utilizing their technology in the Golden Dome. And if that does happen, that could bring, maybe it might not be significant revenue. If it is anything, I think it's like somewhere around $200 million. But that could improve the ties that they have with government contractors. It's all about the whole networking game. And if they are to get in there, that could be meaningful revenue that's not necessarily priced into their future expectations for revenue on their balance sheet. They already do have government contracts, but the magnitude as which that's growing, I think that's a possibility to get up there as well. So, we'll see what happens with that one. For me, when it comes to ASTS, it's not necessarily something, and this is even for Rklb as well, because I would even say that my risk appetite for companies that are pre-revenue or companies that are expected to have large revenues, I don't necessarily make a big size of my portfolio. But what I do expect is that if ASTS does actually work out the way that I expect it to, this position can probably grow to like 5 or 10 times. Obviously not in the next year. You know what? Who knows at this point? Like looking at IONQ or QUBT, that, whatever. I mean, that's not my plan. It would be nice, certainly. But at the same time, like I would say that the degree of confidence for gaining on that revenue in the much nearer term is probably much higher with Rklb. But that's the reason why Rklb has the upward momentum in terms of its price versus AST, which has pulled back considerably. I think there's a lot of speculation in the stock market right now. But when it comes to, let's say, like actual tangible revenue, I think the market wants to see that actually happening. And the reason why QUBT or Quantum, I forgot the name of that company, is like
D-Wave?
around not D-Wave. I think D-Wave is QBTS, but I forget it.
Quantum computing, the
Yeah.
previous energy drink beverage company,
Yeah.
whatever. Yeah.
So that one is like $10 billion valuation, and they only have like
Nice.
$200,000 in revenue, thousands, right? So it's like, why is it trading that much? And I think quantum computing is not going to be anything big for a couple of decades, right? But it's certainly momentum stock. I think when it comes to ASTS, you have investors that are in it, right? And it does go through these hype trains. And there is the risk that it could pull back more, and it wouldn't even make it a cheap valuation either, because they're pre-revenue. So it's very hard to project this. They're all projections in terms of revenue that's actually be tangible to some recurring degree, right? So when you think of it from that perspective, I would say there's less risk to Rklb for the actual capability of having that in the near term. But I think the opportunity and runway for ASTS is probably greater if they do actually meet those goals. Unfortunately, we can't invest in Starlink or SpaceX, but indirectly or by proxy through Tesla or Google, whatever it is, you're certainly going to reap the benefits from that.
Two things. One, I need to address Andre's comment here. There's no such thing as build once and profit. I agree. That's why I said, but the first big build, the couple of billions of dollars that they need to build up their constellation, that's something you need to do at the start. Then, yeah, of course, you always have to go up there, maybe repair, change the satellites, but the big billions will happen at the start of that journey. Of course, there's no such thing as build once and profit. Imagine if such a business did exist, that would be something amazing.
Yeah. I mean, this is oh, sorry, go ahead.
No, then I wanted to ask two things. One, if you could invest in Starlink, $350 billion in valuation, would you?
If I were to, obviously, I think investing anything in private private markets, you need a lot of capital, right? Like we're not talking about like a $25,000 investment. You need to put like $500,000 to $1 million into something like that. And if you were to have that, if I were able to, or if I had the capability to, I would probably have a lot of money to play with. So that would be much more of a moonshot play. I would actually invest in Starlink. And that's mostly because they're already, I want to say mature, but it's a sure thing. Like they're going to be going places, right? Now, are they going to go to Mars? Yeah, like are they going to Mars? I don't know. We'll see. But I would say that investing in Rklb as a retail investor is probably the least riskiest when it comes to a space type of investment. The most runway, I would say ASTS. The most risk reward, I would say ASTS in that matter. Mostly because, well, they already have contracts with these major mobile network operators. So that is definitely speaks volumes. Like they wouldn't invest in this company if they weren't planning to do anything. But at the same time, you know, with greater risk comes greater reward as well.
Mm-hmm.
I always thought that Rklb was going to pull back a lot more during the April pullback. And I was like actually hoping that, but I couldn't, you know, there's like a lot of sayings with Peter Lynch and a bunch of other investors that like, if you're literally waiting to like save 10% on a multi-bagger opportunity, then like you're doing it wrong. Right. And it depends on your time frame. Like if I'm investing in Rklb for, you know, years, like what do I care about saving 10% on my cost basis? Like it just makes no sense at that point. You know, if it was like a 20% position, then maybe, right. I would ladder in. But with Rklb, it's more like I saw an opportunity, so I just added like 30% onto my position. And the same thing with ASTS in April. Unfortunately, one of them worked out and the other one didn't, but I'm still holding. So,
yeah, but yeah, I mean, again, this is for me as well. I mean, I'm already up, not to boast, but I'm already up close to 400% on that position, which is great. But I invested in it because I think it can become much bigger than just a $10 billion company. And I assume you think the same thing about AST. It's not because it's a $9 billion or $8 billion company and maybe, I don't know, a month, 3 months from now, it's a $10, $12 billion. That's the end. But you invested in it probably because you think this can potentially be a $100 billion company in the future because it can generate billions of dollars in revenue and have high margins. I believe I saw the Deutsche Bank report, and they think by 2030 they can generate $5 billion in revenue, have adjusted EBITDA margins of 90+%. So
it's crazy.
Yeah, which is crazy, right? Plenty billions in free cash flow as well, which would mean that you could value it at a higher premium than a business like Rklb because the margins are just much better. But again,
yeah,
I don't think those numbers are conservative. I'm sorry to say, because you're going from pre-revenue, so-called pre-revenue, to $5 billion 5 years from now. That's 5 years of a lot of uncertainty. You never know what might happen.
Exactly.
So
yeah. Which is the reason why the risk is there, right?
Yeah.
This is based off of projections and not tangible revenue. Rklb they're supposed to be adjusted EBITDA profitable. I think like next year, right?
But it depends on Neutron, I guess. It depends on Neutron.
But I mean, it was funny because seeing the market reaction from that earnings, it was like, oh, let's sell off this stock. And it was like, how is this new information? Like, it's just, you're extending the data by a little bit. And then it just, you know, sometimes like that it was shortly after that was when I added more to the position. And I know, you know, I wish I did it in single digits, but you know, it's like, I'm not going to sit around over here, like waiting, hoping for it to go down. You know, if it's a small percentage of my portfolio, then I'll invest and then just forget about it at that point. And I have, and I didn't expect it to recover so quickly. It is nice to see it around like $28 today. Was it still?
Probably something like that.
Yeah. Yeah. Oh, wow. It's more than $28. What in the world? Did not see that happening.
Yeah, it's up to 12%. Is it just because of that Russell 1000 inclusion? Potential or whatever, or
potentially, yeah, no, it's potentially, but I think a lot of it has to do with the hype around space stuff right now, because there's a Falcon 9 launch, and also Elon is like, he's back at it again, which is great to see. But But I would say it's a lot of hype. But the market being up like 2.5% really
Yeah,
helps as
helps.
well. That
Yeah.
certainly helps. But the risk appetite is there. So we've been here with Rocket Lab before. All-time high was like 32, 33 bucks. All-time high for ASTS is actually around the same area too, but clearly one of them is closer to that. But I think the most mindful thing that I can give to people as far as the market today is that don't assume that these gains are going to stick. And it's so tempting with these long shots to take profits and be like, hey, I'm already up like 50% in such a short period of time. Let me just take my money, right? I feel like with these ones, like you just got to forget about it because you're going to wish you didn't do that. Like with Nebius, you have position Nebius, right?
Yeah.
Okay, yeah. So, I mean, I could have easily looked at this, be like, hey, let me take 20% off the table right now. It's like, no, this is a long shot bet. I'm just going to leave it, right? Because then this thing could be like 80 bucks. And I'd be like, damn, if I didn't take 20% off, I would have had like an extra, whatever. When it comes to like maybe with something like CrowdStrike, I would trim. That's a much more mature company. It's very, very expensive at this point, or something like Rubrik that I do own as well. Like it's getting a bit ahead of itself, and the runway in that one, to be realistic, is not as going to be as big as everyone thinks it is. But when I think of something like this, like Rock Lab isn't even speculative anymore. But like something like ASTS, if it goes like 30 bucks, like I'm not going to trim with that one. And with Rocket Lab, I'm not going to trim it either. I don't think I want to. I'd rather just see it run, right? But I'm going to be realistic, and it's like, I mean, Rocket Lab could be at like 15 bucks again. It could be at 10 bucks. It could be in single digits again. It really depends on the whole market. When the market is up near all-time highs from being down 23%, these things going to get bid up, right? And there's nothing to say that we won't go down there again. And if I'm telling you, if the market goes down to like April lows in later on this year, there's no way Rocket Lab's going to be trading at where it's at right now.
Like, no, of course. I mean, I wouldn't mind buying again at 16.
Yeah.
Right now.
That would be
Why
great
not?
to buy some there. Yeah. Exactly. I mean, that should be a good thing, so for investors, like if your conviction's that strong. But if you're buying Rocket Lab here and Rocket Lab gets cut in half and you freak out, then you might need to think about your conviction in this company, right? You should be happy that it's cheaper so you can get the opportunity to buy more. Otherwise, one, you're either investing with money that you can't lose, or two, you're riding the momentum train, which is okay to do that. But at the same time, like when you buy any stock, you need to have some sort of reality or plan in there for how long you're planning on holding this thing. Not just like, I'm going to hold on to Tesla forever, right? When it was like 480 bucks, it's down to like 200 bucks. It's like, oh shoot, I should have sold it for 480, something like that. It's like, well, then that was a trade for you. It wasn't an investment, But if you're buying Tesla here today, be realistic of whether you're going to hold on to it for a long time or whether your game plan is a momentum trade. So, that's the only thing that I got to say to some people around there. Redwire, I haven't, Lucas Z, he asked about Redwire. I have not looked into that. I heard about it. I have no idea what they do. I know they're an outer space company. Like, I just don't know anything about it.
Yeah, it's a company I looked at it a while ago. To be honest, I completely forgot what they do. It was interesting, not gonna lie, it was interesting, but I didn't dig deeper into that. Just to answer Jacques' question here, I do not own AST at the moment. I did put it on the watch list after yesterday's video, but that's about it. And to Andre's point, the low orbit satellites deorbit after 5 years. I thought it was 25 years, and now there is just I don't know if it's already an official requirement or a suggestion that they need to deorbit after 5 years because of risk of debris and all of that. Because the last time I checked was 25, but now I'm looking at it right now, and it says that some regulations might require you to do it every 5 years. So, okay. I guess that will definitely change things. And that's how amortization happens in space. Correct.
Yeah, there's definitely a space hype right now. I'm looking at it. Redwire's up 25%. I think Black Sky is BSKY. No.
Yeah, I guess we're back to where we were. I mean, the same hype as last year when every single space stocks, quantum stock, suddenly for I don't know what reason, no reason to be honest, everything just went up 300, 400, 500%. It was crazy.
This is what happens when you go from the worst sentiment you've seen since 2022 in the stock market to rug pulling for bears. And the market's up 2.5%. People dive in, and this is what you're seeing, right? So, be mindful if everything pulls back tomorrow, does a 50% retrace, these stocks are probably going to be down double that. So, I'm not saying it will be. I'm just saying, like, you guys better have a game plan here, right? Like, is this a trade for you or is this an investment? Great, Rklb is up, but I'm not gonna. I'm coming with the expectation that like this thing is probably going to pull back to low 20s at some point. Like nothing goes straight up, ever.
If we have, because Starship is expected to launch later, I think later today or something like that. Yeah. If it's still on schedule, if it's a successful mission, I guess we continue with the momentum. If it's not, then maybe it will drag down the momentum. But for Rocket Lab specifically, all of the attention is, of course, on that first Neutron launch. Whether it's successful or not, just to see Neutron on the pad and lifting off is going to be already a huge thing for the company. And as a shareholder, of course, I will fully admit that a lot of it is baked into the price right now, a successful Neutron launch. And then if it is 2026, 2027, that's when we actually generate revenue from Neutron, and that's where the fun starts for sure.
I actually think the retail coverage on Rocket Lab is pretty good. It kind of reminds me of Palantir. Not because Garcia's in it, but I mean, it's an interesting, you have a CEO who's very widely outspoken, not afraid to say certain things. And then you have like kind of a similar retail backing as Palantir does, kind of the same moment, obviously not in terms of profitability,
market cap size.
Yeah, it reminds me of it, of the move that it's doing. But one thing I don't like is seeing a company like CoreWeave up in the 120s today. Like it just there's definitely speculation, gambling in the stock market. And, when I see that sort of stuff, I don't expect things to stick. I expect a lot of volatility in the upward and downward direction, but in a day like today, the market is crashing upward. It's not crashing downward. So, I don't think it's going to end. It's hard to put like a timeline and like when these sort of thing ends. But I'm not gonna lie. When I see Chamath Palihapitiya talk about opening an ETF to install in his ventures, it has me a little bit worried. Are we near there? Or are we not near there? So we'll see.
Yeah, the next step in the SPAC business.
When I saw that, I was like, why I gotta do that, man? You're like the person who shows up to the party already drunk and ruining everyone's time. It's just like that's just what it feels like. Xpeng. Chinese Tesla. I've never heard about this, but there was news over the weekend that developed that BYD, which is the largest EV in China, big competitor to Tesla, cut their prices. I think it was like on a bunch of models and stuff by about like 20 to 30%. And then Pinduoduo had earnings today. They're down about 17%. So China's obviously not looking too good. I think this is more of in terms of the U.S. exceptionalism narrative that is continuing back, because if you look at the Chinese ETFs, are basically indices, and German indices, the DAX as well versus the U.S. It's been massively outperforming the U.S. since the beginning of the year. So there was this narrative developed like around March or something that money's moving outside of the U.S. But I think the U.S. exceptionalism will continue. And I think you're seeing a lot of the money rush back into the U.S. You're seeing like a little bit of the inverse. You're seeing a lot of the inverse of global ETFs selling off that are much more higher speculative on that band and coming into the U.S. And I think that's attributed to, you're seeing a little bit of downturn, a lot of Chinese stocks. I know you're an investor in Baba.
Yeah,
those were actually good earnings.
Much
this
better
is why I
than
think
expected.
Yeah, this is obviously something more macro related than anything. If money's leaving China, they're going to sell Baba by default. That's part of the ETF for KWEB and a lot of ADRs in the US, ADR ETFs as well. So that's just going to happen. But yeah, Baba, that's an interesting one because a lot of my portfolio really really centralizes around the idea of cloud computing and scaling and expansion. Amazon is my largest position, and it just like always interested me. Like, man, should I just like? So I put in a trade and I ended up selling for a small loss. But it's like it's not. It's interested me to actually invest in Baba for the long term. It's just the U.S. exceptionalism narrative. I see that continuing to play on. And I think that money is going to continue flowing to the U.S. no matter what, because this is where all the ventures are, right? This is where the most amount of private capital funding is coming into. It's being poured into the U.S. That's why Nebius has most of their data center activity and clients in the U.S. Even though they're building data centers in Europe, I'm sure there's a lot of U.S. conglomerates that are renting out that compute for their clients in Europe, right? And they've even said it that most of their clients are in Silicon Valley. So like they're going to try to cater that the most. And there's a reason why, the demand is in the US and the money's pooling to the US because this is where the money is, right? So I think Alibaba is undervalued. But yeah, those are their cloud growth is pretty massive. I was actually very impressed with that. Basically the Amazon of China. They're also building they also have a cloud arm. So they basically have AWS and they have e-commerce as well. And they're just dominating that space. I still think out of all those stocks in China, I think the least riskiest stock is Baba. Right. Yeah. Like I think that's the least riskiest one out of all of them. But unfortunately, it's in the Chinese market. So it's going to move with those stocks as well.
Yep. No, I've been following Baba for a while. I pulled the trigger late last year, which is the only reason why I'm up close to now 40%. So I have that cushion of, okay, if things go bad, I still have time to sell and still make profits. But it came at a time where US was just getting too expensive. It didn't make any sense anymore. Alibaba was just way too cheap. And I was like, you know what? Let's try this contrarian thing going into 2025. So far, it worked out quite well. Same with Uber. Everybody hated Uber at the end of 24. Everybody was saying that Waymo and Tesla are going to destroy their business. And so the stock went down to $60. I was like, okay, doesn't make any sense either. Billions of dollars in free cash flow. Yeah. It's growing. It had generating way more free cash flow than Tesla. And I'm a Tesla shareholder, but I can still admit that something here did not make any sense. And I'm proven right at the moment because it is outperforming the market quite comfortably right now. But of course, there is that risk that in the future, if Waymo and Tesla do take 90+% of the market, then yes, there will be no need for an Uber. But so far, I see Uber making a lot of great strategic moves, investments, whether it's in the US, Europe, or even the Middle East. So I'm quite comfortable.
That's one thing about these companies, especially Google, where it's like the whole narrative and that the stock gets sold off and the business is just doing just fine, right? Like those are the asymmetric opportunities that a lot of people grasp for. It's not necessarily like 100% my style of investing, but it didn't make sense why Uber was trading so cheap. Like obviously Uber has led the entire sector and basically changed ride sharing as it is today, as well as delivery. By democratizing delivery as well, versus having it, you got to use FedEx, you got to use UPS. That's it. Like they've really changed that entire industry and basically introducing food delivery as well to the average consumer, right? It used to just be like restaurants deliver the food to you. Like, I remember the local Thai joint around here when we used to order delivery, like their employee would come out and drive it and drop it off. Right. And that's the same for pizza places and whatever. And now they don't have to have that overhead anymore. They don't have to worry about drivers, insurance, whatever it is. They just outsource that to Uber, Uber Eats, DoorDash, whatever other companies there are out there. That's what they do. And Uber changed that. They're not going to go anywhere. They lead that industry, and that with ride sharing. Yeah, man, I don't understand it. This is like risk on.
Crazy. Yeah. I know Jose is celebrating right now because he bought here close to the low. So
really, dude, yeah, I bought a small position for a trade and a swing, and I already took my profits on it. I bought in like the 65 after pullbacks are earnings. Just like this chart is just setting up over here for a play. And I sold around $80. But then I put credit spreads on it as well. So I was able to capitalize off of that. And then I'm like completely out of it now. Like this is just going bonkers. I don't want to mess around with this anymore. But this is this is your barometer for how risk on the market is right here. This is your barometer. Like this.
Yeah, I mean,
you want to take the temperature of risk in the market? This is basically it right here.
This trade could have made your next 5+ years in investment, right? You're up 250% in a month. Thank you very much. You pack your bags and you're done.
Yeah, I mean, if you're able to take that risk appetite and go all in, yeah, for sure. But you know, there's always that degree that they say with like, trading is a form of gambling, but gambling is a form of weighing probabilities, in my opinion, which is the reason why I do it sometimes. But
trading or gambling?
I do both, but mostly I do some trading on the side in it to supplement the long-term investing with a portion of my portfolio. But the way that I look at this is that if you're someone who went all in on CoreWeave at $60 and you're sitting over at the $123, the probability that someone like that would sell and just not ever look at a trade ever again for the rest of life is pretty low. That's why probably one of the worst things that can happen as someone new to gambling and casino is to win a jackpot in the beginner's luck, right? Because then you're hooked and you're going to keep hoping to hit that jackpot. And before you know it, you're now at a net loss. And that's why it's like, I can't. Sometimes I look at the trading view, and when I start seeing the extended hours price show them, I'm just like, the market's closed, like especially during the stream. But yeah, I mean that's pretty interesting. We should probably bring this to a close. I didn't even realize it's 1 o'clock yet. But yeah, I mean the market is just, that thing rallied into the close. That just shows how risk on the market is versus last Friday. It's like, it's unbelievable how just a matter of price can just change everyone's perspective on the market.
Yeah, no, I agree. I mean, and this is the thing. I've asked myself, and I talked with Jose as well, and a couple of others. We're like, what stocks are interesting today? And to be honest, we couldn't even name that many other than Google, because Google stays very interesting no matter what the market does. I still think that Google, 172, still, I think is undervalued. But when you start asking the question, what am I willing to buy today? And you can't really answer by giving me 5 names, that's usually when maybe it's time to increase the cash position and where things have gone up maybe a bit too quickly. Now, I'm not saying we're anywhere near or anywhere close to what has happened in 2021. Far, far from it. But the recovery has been something, right? The recovery since the lows in April have been, a V-shaped recovery, I'd say. A V-shaped recovery.
It was a V-shaped recovery.
It took a little bit longer than expected, but it recovered. It recovered nonetheless, and then some. So yeah, right now, I like the companies that I own. Tesla, I'm still bullish on Tesla's future, but like I said at the start of the year, when it was closer to $400, sorry to say, it just didn't make much sense. Didn't make much sense to trade above 400. Then when it dropped to 230, 250, okay, negative momentum. Everything was going against them. Of course, you then have analysts that have to downgrade because the stock is down, and now they have to upgrade because the stock is up. It makes total sense because the thesis changes every single week. But we'll see. Right now, the expectations on Tesla are that they're going to successfully launch that robotaxi network in Austin a couple of weeks from now. Plus, we have supposed to have the more affordable models come out as well pretty soon. Now, not a gambling. I sometimes I like to play blackjack, but I could say that there is a higher chance that Tesla stock drops when robotaxis get out than it goes up. Right? It might be
a sell the news
event, because right now the stock just keeps going up, even if the news is negative, which again tells me that the market is in a good mood.
Oh, really good mood. Actually, I still remember in Chris's Discord, there's a Tesla channel that I created, and there's a few key people in there. And I remember I was like trying to capture sentiment just by looking at the sentiment on Twitter and looking at the sentiment in the channel as well. But also, it's like, for me, just Tesla has always just been a massive trade, right? In both directions that I've played it, it was just a trade. And the last time I was in Tesla, I admitted myself, like, this is just a trade. I was honest with myself. The other time I always thought it was an investment, and then I end up selling when the thing gets overvalued, because it's just like, it just makes no sense. I'm much more active in certain parts of the markets, as you can tell. And I have a Tesla position now, and I bought it overnight in Robinhood, and it's a trade. There's no way I'm going to hold on to this, because I know that like you're saying, there's a high possibility to sell the news event or not. And if the thing gets back to 480, like I bought Tesla, I loaded up on Tesla in addition to calls when it was like, I loaded up in shares when it was like 150 to 200. Last year.
Yeah.
And I loaded up on calls after the earnings that they had, where it was like, it went down from like 240 down to 220. I was like, I'm loaded up on calls right now. Like, their earnings are not as bad as the market really thought it was going to be the last quarter. And they did it again the second quarter, like, and the momentum is there. So let me just go ahead and just put in a small position. And then I literally got out the day that it topped. And I'm not trying to, I got completely lucky with that. Completely lucky. I was trimming stuff as I was going up, but like the day that I officially got out was when it topped. And it was 100% luck that I got out then. But in my mind, I knew it was a trade. I had my plan that it was a stop loss. My stop loss was if it breached 400 again. But luckily, I got out and I took the profit before that happened. But yes, I could have went in and caught the bottom on this trade in the 200s, but it just didn't feel like at the moment that the sentiment was that bad. So yes, I am somewhat chasing it right now with a small position, but at the same time, like, I know this is a trade. I have my stop loss in it, right? I just feel like when people chase these momentum stuff, like, you got to have a plan in it when it comes to trading it. Like, you got to know what your exit plan is in case it does go up. And an investment, different story, because this thing could be worth whatever. Kathy Wood thinks it's going to be worth $2,500 by 2030.
Yeah.
The last time she had that projection, the time before the last time she had a projection, she was right? So the last time she had a projection, probably not, right?
Yeah, she was right, yeah. But she also has a year and a half left for Roku to reach $1,600 per share. So, no, but yeah, I mean, for me, Tesla, it's a position that I had. I first bought in 2019, so it grew into a huge position in the portfolio. But I've been selling, right? I've been selling when the stock just went up and it didn't make sense. I sold at the start of this year because the numbers didn't make sense, and yet the stock went up and up and up. Like everything that, for example, Dan I've said a month and a half ago when the stock was at 250, 260, I said in January, but in January, the only difference was that the stock was above $400 and not below 300. Again, there is a lot of future potential, right? With robotaxis, with Optimus. But here again, an investor should ask itself, okay, cool. It might happen, but I might also be paying right now because Tesla is still a company worth over $1 trillion, yet things are trending down and not trending up when you look at the overall business. Energy is doing very well, of course. But how much of future revenue am I paying for already today? Right? Because I do think that I have time to see how robotaxis and Optimus plays out for me to to continue to add to the position. So yeah, and I don't think I like too much risk because my core portfolio is basically Amazon, Meta, Google.
You are not a risky person. I'm a risky person when it comes to trading, but I admit that I'm a risky person when it comes to trading. When it comes to core portfolio positions, I'm not that risky. That's why it's like positions like Rklb or Asts, like these are very small positions in my portfolio. I had a 10% allocation in speculative stuff earlier last year. And now that 10% is bigger. But it's like the way Peter Lynch does it, where he has a small set of fringe plays. But for me, like my core positions are all profitable companies, right? Like I'm not going to risk something like in a downward trend in the business cycle to supposedly make like 100% on it. But anyways, that being said, I actually got to drop. But it
Yeah.
was great chatting with you, Neil. I definitely want to do this again. This was awesome. But yeah,
Thank you for everyone that has been joining in. We really appreciate that. We'll do it. Yeah, we'll do this again for sure. For sure. Might even talk about Grab next time.